Okay. Okay. All right, if you'd like to start, go ahead.
Okay. My name is Marcus, and I work for the Office of Illinois Comptroller Susanna Mendoza, and I work in the Office of Constituent Affairs, and we have many different programs. We have Smart Business, which helps business owners get certified with the state so they can successfully bid on state contracts. We also have Smart Consumers, which this is part of that series, which is Identity Theft and Finance 101. And today we will be going over Finance 101. There is a lot of useful information in here, and I am mindful that many of you are on your lunch break. So with that being said, I'll make sure I don't take up a lot of your time while giving you this useful information. So with Finance 101, one of the first steps, you need to examine your current financial reality. That's income, expenses, and savings. Ask yourself about your future goals. And income, expenses, and savings, we're definitely going to go over that in the upcoming slides because this is very important. Okay, and here are just some statistics right here. Less than 1 in 4 Americans have enough money in their savings to cover at least 6 months worth of expenses. That's very scary if you think about it. And we never know what could happen. Nobody expected a pandemic. And, we just had so many people who weren't able to go to work at that time. 42% of people in the US have not saved for retirement either. So that's something to, really think about. That's scary because we're all gonna have to be in a position just the way just the way life is set up. We're all gonna get older and, it's gonna come a time where it's just gonna be more difficult to work. And it's really gonna be important to have money in your retirement. And, with 42% of the US population not having enough money saved in retirement, that's very scary. And it's definitely something to think about. Personally, I think that's very scary. Total credit card debt in this country is $13 trillion. The total student loan debt in the country is $1.5, trillion. So, it's really something to think about when managing these credit cards. Things can really get away from us. And, in the upcoming slides, we're going to have some really useful tools in regards to managing credit card debt. And just not getting into a credit card debt. And part of that is avoiding unnecessary spending. Unused memberships, for example, I do a lot of streaming, but if there's a membership that I'm actually not using, like if there's a television series, if there's nothing, if I was watching a series, but I decided to stop, if that's $11 a month, I'll go ahead and cut that out. Another example would be gym memberships. Some people decided, hey, I want to stop using my gym membership. If you do that, those can be kind of pricey. Make sure you counsel them. Also, impulse buys. This is difficult. If you got a credit card or, you just got paid, if you walk into the store and you might see a bag that you like. I'm really big into shoes and things like that. But I just understand that, I don't need this. So I'm just not gonna, purchase it and make things more difficult for myself. Also with credit cards, when they're not paid off, or if you're just paying the minimum, or even if you're not paying the minimum, if you're paying a certain amount, you really have to be mindful that you are getting charged interest with those credit cards. And, this is another way to cut expenses like this. So these ATM numbers, ATM fees, that's a big one. Major consumer banks netted over $438 million. And this wasn't even in a whole year. This was just in the first quarter of a year, $438 million. So if you can avoid using ATMs that charge you, try to use your own, bank or ATM, or just come up with another method where you won't get charged. Because, I personally don't use an ATM that isn't assigned to my bank, but they have different fees. I've heard some fees being, $3. That really adds up. So if you go to pull $100 out of the bank, you're really pulling $103 out of the bank. So it's really something to think about, at the ATM. And, a lot of people, when you're in the office, it's easier when you're home, but I'm one of those people. If I'm in the office, I'll bring a bag lunch, just like I used to do in elementary school. You can save roughly $2,000 a year by bringing your own lunch to work instead of eating out. Eating out can be pretty pricey. Also, brewing your own coffee at home. I know I'm a big coffee drinker in the morning. Haven't had a lot of it today, but with the expenses, this is really right on, because when I saw this number of $90 a month, I tried to add up, what I used to spend or how much coffee would be in our home office. For me, the home office was the Thompson Center. And for me, it was only $10 less. It came out to $80 a month. So just investing in a coffee mug, I get the bulk coffee, the coffee that I get, the jugs that I get are only maybe $9. But believe it or not, the way I drink coffee, it can actually last me probably a month and a half. So you can save a lot of money by bringing your own lunch. And, if you're a coffee drinker, definitely invest in the mug and brew your own coffee at home. And this is a big one. We mentioned this a little earlier, but cable, phone, and internet. Shop around. Companies, without a doubt, will compete for your business because there's so many opportunities out there. Also, you need to reevaluate your bills. Look at your yearly and monthly, look for yearly and monthly, deals, and, really bundle and save, because again, these companies will definitely compete for your business, especially if you have your own, if you have a cell phone or something like that. A lot of companies are offering their own packages. This is a big one, and I'm definitely guilty of this myself, and I need to work on this. Utilities, you control the meters. If you're not using a light, and I'm bad on this one, but if you're not using the lights on one side of the house, make sure you just turn off the lights because you're getting charged for that. Also, unplug appliances that you're not using. If you have a programmable thermostat, use one. If you're able to invest in that, definitely do that. And, did you know there are peak times to run utilities? So this is something really, really, to think about. And this is something that's pretty easy to manage and control. It's very easy to just turn off the lights or, unplug something you're not using. Now, when we look at insurance, this is something, to think about. The higher your deductible, the lower your insurance premiums could be. By lowering your deductible, you have less out-of-pocket costs when making a claim. Make sure you're paying for the coverage that you need. Bundle and comparison shop. I mean, with insurance, I can't stress that enough. And again, these companies, you have to shop around, but they will definitely compete for your business because there are so many insurance companies. In fact, I'm actually looking for a better price when it comes to my car after talking to a friend. He pays, I think, $50 less than mine. So, that $50, if I could get the same deal, that could be going into my pockets, or I could be using it for something else. So this was one of the first slides when I said we would get to it. Net income, net income. So that is your net pay minus expenses. So your net pay minus your expenses is your net income. If the result is positive, start to track and maintain what you're doing right and continue to try to save. If the result is negative, start identifying where you can make cuts. And a lot of that comes to comparison shopping, turning off lights, bundling and saving, on internet packages. It comes down to the insurance. So it's a combination of the many things that we talked about already. And I just want to go over this one again. So net income, that's your net pay minus expenses, and that is what your net income actually is. Again, when we talked about retirement, 42% of Americans have not saved for retirement. This is something to think about. Max out your contributions to your retirement account. Max out your contributions to your retirement account. And this is something I really like to talk about, your credit. Your credit is your financial fingerprint. When it comes to a credit report, just about everything is on there. Like they even know if you have a co-signer, so there's so much information, home loans, auto loans. So credit card debt, your student loans, your credit is definitely your financial fingerprint. And we're going to go over that now. Here are different types of credit. You have revolving credit, that's unsecured credit cards. Then you have non-revolving secured mortgage or auto loans, fixed versus variable rates. Then I'm just going to let this slide sit for the people to, look at a little bit. But this is an example of, oh, sorry, I moved ahead in the slide. So this is an example of an auto loan right here. And as you can see with the payments, a lot of this comes down to, what you're actually able to pay. And it's just, for example, with, monthly payments, if you're able to pay more and, get that car paid off, go ahead and do that. But you may not be able to do that. But I'm going to leave this slide with you all a little bit, just so you can see like the balances and, the interest amounts and, so forth. And just notice the principal amounts as well. And the total interest paid, really, so, this is a loan example. Whenever you're filling out a loan, please read the fine print. And again, I'm just going to leave this slide here because, believe it or not, some people, have not financed or had to finance. But, if you look at it, you just really need to stay on top of this, whether, no matter what it is, whether it's a car, whether it's a credit card payments, anything that you have to pay back, you really have to think about the interest and, how much it could actually hurt you, even if if you fall behind on the payments, that's worse. But if you're making minimum payments, that interest can really rack up. And here are types of credits. This is something else that I like to talk about. Types of credit cards. So you have premium, you have charge, you have retail, you have affinity, you have traditional, you have rewards, and you have secured. Many people, people have different things that they like. Like if you're into retail shopping and clothes, or whether it's business, depending on what type of business it is, and people like those retail cards. A lot of people like cards that actually have rewards, specifically rewards that offer cash back. But even though, cards offer, different things, you still have to be mindful not to get behind and get overburden yourself with credit card debt, because essentially that's not your money, that's borrowed money, and whatever you use, you have to pay it back. And these are some of the benefits of credit cards. They really help you establish your credit if you're really maintaining them. If you're really maintaining your credit cards, they can help establish credit. That means if you're making payments on time, you don't fall back, you don't fall behind on payments. They're convenient. They can be really good in emergencies. It was a while back, and different people look at emergencies, different ways. But for example, I knew someone personally, a friend of mine, who did not have a lot of money, but he had credit cards. And when a loved one passed away in a different state, he was able to really do everything that he needed and be there. So, that's definitely a benefit. They can help with reservations, improving credit scores. Like if you really stay on top of those credit cards, if you keep the balance is low, they can really improve your credit score. And big ticket items. I had a situation where I don't want to throw all this, money out here, where I had a repair on my car that really needed to be, met. And this was a while back, but that was a $2,200 payment. I was able to swipe a card. And some of the other benefits, they say you can really track monthly spending. So if you use credit cards properly, they really can be helpful.
I have a question.
Okay.
My question is, when you have a credit card and you pay it off, is it wise to close the credit card, or should you leave it open? There's a lot of myths out there that you shouldn't close it because it can tank your credit score.
One of the things is I would actually check with the credit card company on that. I just can't give advice. I can't say not to close it, because if the card is paid off, it can really help, really be helpful with your credit. And they have all sorts of, different way. You can check with your credit with the 3 credit bureaus, and further down, we'll get into those slides, but you can actually call them. You can send the email to them, or you can actually send a letter. But, so I want to say what I feel about it personally, but at the same time, you may actually need that. So I wouldn't say close it out. I think some of it could be preference. Like if you had a problem and you were behind on credit cards so much, and it was just like you were overburdened with debt and you were able to pull yourself out, then maybe someone would. But I think it's really situational. So here's the thing. That's an excellent question, but I just feel like that's situational, and situations change per person, and I just wouldn't want to give you bad advice. because that may, closing it out may be, great advice for you, depending on what you personally went through. But for the next person, that may not be, great advice. For example, depending on the type of car, the friend who actually didn't have a lot of money, but he managed his credit cards properly, he was able to go to his loved one.
Okay, thank you.
Oh, no problem. Now, here are the 4 C's of credit. Character, that's your credit history. Capacity, ability to repay. Capital, money for a down payment. And collateral, valuables used as security for a loan. Also, and this is something, but consumers under the age of 21 must show that they can afford to make payments, or they will need a co-signer who is over 21. But this right here just gets back to what we were speaking of when we talked about that digital fingerprint. Like all of this, no matter what you do, this is going to be in your credit report. Also, a lot of people definitely know this information, but at the same time, you wouldn't believe how many people are struggling to, probably understand this. But, let's just talk about your debit card. These are very distinct differences. Your debit card is your money. Your credit card is borrowed money. With your debit card, you cannot go into debt. However, one thing that I would say, depending on your bank, if the balance is low, you could overdraft, you can get an overdraft fee, but that's a lot different. That is a lot different than, having all of this interest that you have to pay. So a debit card, you're really not going to go into debt, but you could get an overdraft fee depending on what your balance is like and what you purchase. A credit card, though, that may create debt. A debit card generally has no rewards. A credit card, though, many of them has points and rewards. And I personally typically try to stick with those types of credit cards. A debit card has varied liability. A credit card has limited liability. Your debit card, requires a PIN. A credit card generally has no PIN. I really don't have a lot of credit cards, but there are, I believe they did come with PINs. I've had them for a while, but I'd never use them. And paying off debt, snowball versus stack. This is very important to think about when you're paying off debt, snowball versus stack. Now your credit report, what is in it? And this is one of the things that we talked about earlier. Your credit report, many different things are in it. This is your digital fingerprint. And so this is what's in it. Your credit activities, lines of credit, current and former and when they were open, your credit limit, your loan amount, co-signers, and additionally your payment patterns. This is really important, and this is a lot, the payment patterns, that is a lot deeper than credit cards, but this actually comes down to car notes, home loans, so forth. So all of this is in your credit report. Your credit score, is a grade based on your credit report. It's a way to measure the credit risk of a person or organization. And this has a combination of factors: types of credit, payment history, amounts owed, and new credit. And I'm going to leave this with you. This is like your credit score. So 850, that is excellent. That is what everyone should strive to be at if they're able to. A 650, a little over 601, I would say 650 is considered fair. So you could probably make some moves if your score is there. But if you see like 301 to just be in the 500s at all, you don't want to be there. But again, just to be good, a little over 661 is good. But 850, that's excellent. That's what everyone strives to be. I hope to get to 850 one day personally. And here are some tips to improve your credit score. And we went over some of this, but pay those bills on time, pay them in full, keep your balances low, and check your credit reports at least once a year. The average household has over $6,300 in credit card debt. 56% of consumers pay their bills in full each month. 18% of people only pay the minimum. The total credit card debt in the US is $1.04 trillion. That's a lot. The national debt is in the trillions of dollars. So that's something to think about. And also, 1 out of 10 adults are considered invisible to lenders because they have absolutely no credit. And here are the 3 credit bureaus. I'm going to leave this with you. These are the 3 major credit bureaus. Now, here's the thing. If you want to check your credit report, these are your options right here. Now, I know you may be looking at this and you're like, 3 credit bureaus, but they all report to one another. So you can reach out to TransUnion. And if you reach out to TransUnion, they're going to tell Experian and Equifax. If you reach out to Equifax, it's going to be the same. They're going to report to Experian and TransUnion. And you can actually call, you can email them, or you can write a letter. And I'm just going to leave this slide here for a little bit so you all can take the information down. So I just want to give people enough time. Okay, I'm going to move on. And that was actually the end of the presentation. Are there any slides that you all wanted me to go back over?
No, but I have a question. Hello.
Okay. Yeah.
Sorry, I'm late. I we had a one of our church
Sister
members pass
Moore.
away. Hi.
Hey, how are you?
I'm good. I'm good. My question is, what do you think, or what is your take on those memberships with CreditWise or Experian and those type things? Are those helpful to be a part of or not?
Yeah, I would say so. With, if you're talking about the credit bureau, or I think part of the question is too, you are mentioning those apps. I think it's great because, I'm the type, when we look at retirement and all of that information as we get older, I don't want to say get older, I misspoke with that, but just being mindful of our credit, it's really good to have those apps. I personally have one on my phone and I constantly check my credit. I have student loans and things like that. So and then too, it's good. You just want to make sure there's nothing on your report that shouldn't be on there to hurt you. So, and then another thing that was really good about your question, Sister Moore, is that if you have those types of apps, you can immediately, it gives you the option to dispute it right there. So yeah, yes. I agree with you. You definitely should have those, and they're free.
They're free. And then also when there is something on your credit report, you have a better way to track who it is. A lot of times they'll have an address, a phone number, someplace where you could call, whereas before you just go into the blind trying to find out where this account is. They typically can give you some lead information. And so I think they're a good thing, but I did not know what your take from a professional standpoint would be.
Yeah, I definitely agree with you. And again, like this morning, I was looking at my credit. I looked at it probably twice because just with like the student loans, because I'm really good, but I have to take care of those. So I always want to make sure that those are showing in good standing. So I think with like a particular company, because there's a lot of organizations there, I don't think that I have the authority to endorse one. I think you
Mhm.
should definitely get one because I personally do. And you mentioned Experian, that those credit bureaus are great to talk to and report to.
Yeah. Well, that's good. I'm so glad that that this information is available. We've had a couple bites from the business owners group. I think it is the time. So I'm going to offer this again, date and time. I did send out the recording. The person that is the ministry lead, she had lost her father, and I was trying to hold it down until she got back. Well, she finally got back, and so she will be our face and our point of contact, so that we can continue on with this type of presentation and in the relationships
Oh,
building. I did have another question. I received your email in regards to registering our business and also
okay.
Bishop's business. And so I want to make sure that I get that to you by today. I think you need just our business information again. Is that what you need?
Yeah, I'll definitely follow up with you after the presentation, but yeah,
Excellent.
yeah, definitely.
Okay, that sounds good. Those were all my questions. I thank you to, I think it's Matthew. Is it me, you, Matthew on here? Yes. Thank you, Matthew and Marlo, for being a part and
No problem. Thank you. It was great information.
good
Thank you,
information.
Mr. King. Really appreciate your time.
So we did finance 101. Did we do identity theft yet?
Yes.
We did. And so now we're on to the next one that's made available. And if it's any consolation, we do financial peace here at our church, and we
Mhm.
promoted that, and we did not get not one sign up. And
Mm.
so people are just very lethargic and coming back. And so
Yeah,
hopefully we're just going to keep at it so that by the end of the year with this ministry and these presentations, that people will plug in. And so
okay.
it is something that is systemic to all the different areas when we're talking about money.
Exactly. We have a smart business presentation coming up together as well too, as
Yes.
a group, which, okay, I'm looking
Mhm.
forward to. Well, hey, yeah, we went to the comptroller's office. We want to do as much for the people as we can, and we really appreciate you all hosting this event. So anything that you need from us,
No, we're just going to keep hosting, keep hosting, keep pumping it out there. Like I said, it's in our 411 that reaches our viewers. We have over 1,000 viewers on Sunday. And so I think it's just people. So just gonna keep plugging at it though.
okay. Well, hey, I really appreciate you all. Do you all have any more questions for me or?
No, sir.
Nope. Well, hey, I appreciate you all. I'm about to get out of here and I look forward to working with you all soon. Thank you.
Okay,
Thank
all
you.
right.
Have a
Good.
blessed
Thank
day.
you.
All
Thank
right.
you.
Bye.
Bye.
Bye. I know.